And now, Stan, at this time, I will turn the webinar over to you.
Hi, everybody. My name is Stan, and I'm a Juris consultant, and I'm going to be talking about using credit card bank accounts in Juris to enter your credit card transactions. One of the things over the last several years that have affected a lot of firms is that they're using credit cards to pay for expenses now rather than just writing a check for everything. And one of the issues they run into is, how do I make sure that we get all the transactions in and accurately, and how do we reconcile those to make sure that everything is complete the way it should be? It also has implications for client costs and balancing of client costs, which firm administrators or accountants should be doing every month. And if we make a lot of mistakes in entering our credit card transactions, that makes it difficult to balance our client costs. And so hopefully the process that I go through today on this should alleviate most, if not all, of those issues. So keep in mind this is a suggestion, and you don't have to do it, but if you want to implement it, let us know if you want help implementing it afterwards, and we can maybe arrange some sessions to help you get it set up and going. Today's purpose is basically to be an overview of the general concept of how it works, how it's set up, and what the process is. I've implemented this at a number of different firms, and they will often tweak it to fit the particular situation that the firm has. And so don't think that what I'm outlining when I go through the steps is exactly how you have to do it, but it will be similar and involve most of these steps. So what I want you to do today is get a general idea of the concept of how it works and how it works to your advantage. The first thing I'm going to talk about is what the benefits are of setting up credit cards as banks and Juris. Now, if you go into your Juris and go into tables and bank accounts, you'll see your operating and your trust accounts and things there too. Well, this process is going to involve us setting up a credit card, whether it's American Express or a Visa or whatever, as a bank, and using that to process transactions and as a tool to reconcile to the credit card statement every month. The benefits of implementing such a process is that it makes balancing client cost advances substantially easier, as expense entries are tied to payment vouchers. So if you should be, if you're not, should be balancing your client ledgers of client costs from the expense analysis report to your general ledger every month. When those things don't balance, it's usually due to some sort of error, a clerical error. We've charged something to our client cost advance general ledger account, but we forgot to put it on a client or matter, or things like that. Troubleshooting that for whoever's reconciling is substantially easier, and I mean substantially easier, if the expense entries are tied to a payment voucher. Because we have a number of reports, and if you have the Client Cost Advance Power Pack for Juris Suite, we have reports that will show you where the expense entry doesn't equal the amount that you put to your GL account. And if you don't tie the expense entry to the payment vouchers, it's virtually, if you have a lot of transactions, it's virtually impossible to find all the errors. I mean, you could spend an entire month doing just that. So it does make a huge difference when you're balancing your client costs and you do a lot of expenses via credit card. It allows you to use the bank reconciliation tool with the credit card statement to ensure that all credit card transactions were entered into Juris so that we didn't miss any. This speaks to having just accurate bookkeeping and accounting records. A single check is written to the credit card company, hitting a single GL account when you go to pay the credit card. And the credit card bill can be paid even if you're not caught up on getting all the credit card charges entered into Juris. So with this process, you can actually pay the bill at any time, even if you don't have all the transactions in yet, where I've had some clients in the past that were late and incurred finance charges because they were trying to get all the transactions into a bunch of payment vouchers that they could use to pay the American Express check. Well, this eliminates that issue. The expense entry date on clients' invoices will reflect the actual date of the charge. So if you charge something on a credit card on like June 16th, and the credit card bill doesn't come in until July 7th, the client's bill will still say June 16th because that's what the date of the charge was. And also the credit card liability shows up on the balance sheet for greater visibility of amounts owed. So this is going to involve, as you'll see shortly, creating a general ledger account that will be a liability account and that should appear on your balance sheet for amounts owed. Now, some people might say, well, Stan, isn't that accrual accounting? And it's actually not accrual accounting from the IRS's perspective. The IRS considers, and actually in generally accepted accounting principles, once you have committed to paying something, which is basically what you're doing when you use a credit card, you've committed to paying it on that and at a later date, it's a liability that does need to go onto the balance sheet. And they don't consider that to be accrual accounting. They consider it to be cash basis, and the cash was technically expended at the time you swiped the credit card. So first I'm going to show you how to set up a credit card bank in Juris. This part is pretty simple to do. The first step is we need to create a credit card GL account. It's going to be a balance sheet account. It's going to be a liability. Most likely it's going to be in the 2000 series of account numbers, but that's going to vary depending on what your firm has used for a numbering system for your GL accounts. I generally prefer, and most CPAs prefer, that assets are in the 1000 series, liabilities are in the 2000 series, owner's equity or owner draw accounts and retained earnings, those sort of capital accounts are 3000s. We usually have the revenue in 4000, and then expenses are going to be like in the 5,000 or 6,000. That's the normal numbering system for most firms. That's why I say it most likely will be in the 2000 series. But whoever set your accounts may not have done that. You just need to make sure that you put it where the liabilities are going to be. The parent control is going to be when debit, because normally this is going to have a credit balance in it, so it gets paid. And then you don't want to forget to add it to your financial statement layout for the balance sheet if you do your financial statements through Core Juris or through the Portrait Financial. Or in Juris Suite, you'll need to map it in chart of accounts to the current liabilities account category. So and that goes not just for this account. A lot of people forget that whenever they create and start using a new GL account, they need to add it to their financial statements. And that's the most common cause when people are contacting me saying, my balance sheet doesn't balance. And that's usually because there's an account missing, or we've taken a profit and loss account balance sheet, or vice versa, those sort of things. So that applies to anything, but I just put that on there as a reminder for you. And then the second step is to create the bank account in Juris. It's going to be an operating type account, and you're going to use the GL account number that you created just in this previous step when you set it up. So here's what the bank account setup would look like in Juris. You probably have seen this before. In this example, I set up a bank as an American Express credit card, but you know, it could vary your firm, and you could have more than one possibly as well. You can see I didn't really put a bank account number in there. You might put the credit card account number in there if you want. It's not necessary as long as you're able to identify the bank with the credit card that you're doing this with. And the next check number, when I set it up, I just started with number 1. You're not really, as you're going to see, you're not really going to have check numbers for these credit card payments. Although the system requires check numbers aren't really relevant, so it doesn't really matter what you put in there. The check layout code, isn't really going to matter either. I would just set the same layout code that you use for your operating bank and make sure it's an operating account. And then you'll notice that the asset account, in my particular chart of accounts, I numbered it number 2100, and it's called American Express Credit Card Payable. Pretty, and then you hit save, and you got your bank account set up. So now we're set up. Now we need to know what's our process for entering the credit card transactions into Juris. Now, the first thing I want to talk about is for the accounting and or billing staff or whoever is going to be entering these, I want to talk about the notification of credit card charges. At most firms, the accounting department generally learns about credit card charges in a combination of ways. They might get an email communication from the card user with information about the charge. The credit card receipt might be physically given to them, so someone would come in and give you a credit card receipt and make a note on there as to what it was for and who it was for. The credit card receipts might be attached to an expense report, in which case you want to be careful in the expense report of making sure that we don't cut a check and pay the person, because we're talking about corporate cards here. We're not talking about someone using a personal credit card and then asking for reimbursement. But I know at some firms, they'll do an expense report. They'll have a separate section for charges they put on the company card and then charges they want reimbursed for. So they may be on there. And then our final place is the credit card statement. So if we haven't gotten them from the other three, invariably there's going to be things that show up on the statement that nobody gave to us. They didn't bring it by, they didn't give me the receipt, they didn't send me an email, but yet it's on the credit card statement. So this is ultimately where we're going to find the missing ones and where the reconciliation process is going to come in later. Now, receipts or notifications should include a description of what the charge is for and whether or not it should be billed to a client matter. And of course, if it should be billed to a client matter, it's better say who the client matter is. If not, if they're still standing there at your desk when they give it to you, say, hey, what client matter is it? If they email it to you, hit reply and say, what client matter is it? If it's for meals and entertainment, and that might be a client expense or it might not. It might be marketing or the business development expense. But if it's for meals and entertainment, it should include a list of all attendees and a brief description of business conducted or discussed. This is actually an IRS requirement. If you were ever to be audited and they looked at those, if the attendees are not listed and it can literally be a one-line description of, if you guys have a tax practice, you might say, you know what, discuss tax return with client, or say Stan Graham was the client, it might say discuss tax return with Stan Graham client, something like that. That's all it needs to be. But if you were ever to be audited, the IRS can and probably will disallow all those expenses. You only get half anyway, because of years ago they changed the tax law to where you only get to deduct half of it on your tax returns because they consider that to be an area of high abuse. But they can disallow all of it if you don't have a list of the attendees and a brief description of what was discussed. Credit card transactions should be entered into Juris as they are received. So this ensures that most client advances will be billed to clients at the earliest opportunity. So ideally, we don't want to wait until the statement comes in to do them all. It also makes the job a little bit easier when the statement come in if we have most of the transactions already entered. And then firm expenses will also get recorded in the month they were actually incurred, as opposed to when you paid the credit card bill. So it gives a little bit more accurate reflection of when expenses occurred. But when you go to reconcile your credit card statement to the what you've entered in Juris, it's going to be a lot easier if you've been entering them in during the month, and you only have to do a handful of them every day. So it only takes you maybe 5 or 10 minutes a day to get them all entered, as opposed to getting everybody's all at once at the end, and you're spending a whole, a day and a half trying to get them all done so you can get them on bills. So they really should be entered in as they're received. This process involves using manual quick checks to enter in the credit card transactions. We'll be using the master temporary vendor as the vendor, and we're always going to begin the vendor name in the temp vendor with the initials of the credit card user. That's going to be helpful in the reconciliation process, so you'll see a visual of that shortly to see what I mean by that. And I'm going to walk through some screenshots of this process step by step in just a moment. We're going to use the credit card bank that we created as the bank account. We're also going to make sure that the invoice date, voucher date, and check date are all the same, and they're all the date of the credit card charge. And the check number is actually irrelevant. I mentioned that earlier, but you have to put something in there. It is a required field as we're walking through this. I usually recommend numbering them consecutively within the batch. You can reuse check numbers as long as they're not in the same batch, but so you might want to turn off your check warning if you're just numbering them consecutively. If you're there's an alternative process that I'm not going to go through today where you create the payment vouchers first and then just pull them into a check batch and actually print them out on paper. That would actually assign the check numbers for you. So anyway, these are the steps that we're going to follow. So the first thing is we open up a quick check, and you're going to put the bank in first. I don't believe that the master temp vendor icon, which I have circled in red there first, I don't think that becomes active until you put in the bank account. So when you do a new quick check, you put in the Amex bank account, and then you're going to click on the temp vendor icon. That I don't know what that's supposed to be. I always say it looks like a choo-choo train to me, but that's how you get to the temp vendor. And once you click on that temp vendor, it brings up this temporary vendor information field here, and the vendor name, as I mentioned, is going to start with the timekeeper's initials. Now, the sample database that I use to create these screenshots actually has a timekeeper with the initials AAA. It was like Albert Allen or something like that, just a made-up person. So that's why it says AAA there. And then I put TGIF restaurant. So they went to this particular expense. They went to TGIF for dinner or with a client. What I put after the dash there is generally what I see on the credit card statement or the credit card receipt as to where they went. TGIF restaurant or O'Charlie's, or it might be U.S. Patent and Trademark Office. It might be American Airlines. It could be any number of things in there, whatever they charged to their credit card. The rest of the stuff you don't have to fill out. The discount account's going to auto-populate by what's set up on your master temp vendor, but we don't need to put an address in here. We're not writing a check in reality. Even though we're doing a manual quick check, we're not really doing a check. We're not printing a check, and that's why we're doing it this way. So we don't need an address. We're not going to mail this to anybody. So once you've selected that, it brings you back here. You'll hit your new icon, which will assign the reference number to it. That reference number is just a system-generated consecutive number for each quick check. The invoice number, you have some options on what you fill out in the invoice number. You can take the reference code from the credit card statement, or you could use any other optional identifying number that you want to put in there. I'm personally am not a big fan of putting the reference code number from the credit card statement in there because they're usually huge numbers. I don't want to sit there and take the time to type them in there because it's not really going to, we're going to be able to identify it by the TGI Fridays or whoever the vendor was. We'll be able to identify it from that and the amount, so we don't necessarily need that. But if you want to do that, you can. If you're going to use some other identifying number and you're doing multiple ones, you might have something you can copy and paste in there for each one. And then I would generally change the invoice date to be the date of the charge, and then the amount. This particular meal took the client to dinner. The bill was $56.17. So once you have that entered, you're going to double-click to get to the payment voucher behind the scenes. So when the payment voucher comes up, the first and most important thing that you want to do is to change the voucher date to the date of the charge. Because if it's for, particularly if it's for a client cost, the voucher date is what's going to populate on the expense entry that we're going to do. And it's not something, once you get to the expense entry, you can't change it. So you want to change the voucher date first to be the date of the charge. You'll go down to the reference field and you'll type in, a description of what it is. What you'll notice when you first open that up, the reference field is going to be pre-populated with the words Quick Check Batch. And we want to get rid of that and replace it with a description of what it really is. Whatever is in this reference field is what's going to show up on your general ledger trial balance detail. And whoever your accountant is, and you may not care because all you do is the payment vouchers, but your accountant or bookkeeper or firm administrator, when they're analyzing GL accounts, the last thing they want to see on that detail are the words Quick Check Batch. They want to see what it was for so they don't have to go dig it up and ask somebody about it. You also want to make sure that you have the right general ledger account. There may be a default distribution account set up on the temp vendor, or there may not be. If your temp vendor does not have a default distribution account, I might be inclined to not put one in there, and that will force you to have to open up the GL distributions. You see the little arrow that I have pointing to the GL distributions. You open it up in there and you tell it what GL account to hit. If most of your expenses, I don't like putting the client cost advance account as a default on that temp vendor in this case. If it's already set up that way and you already have it set up because someone tried to do this earlier, I guess that's okay. But the problem is if it's a firm expense and you forget to open up the GL distributions to override it, then you're going to have something sitting in your client costs on the balance sheet that's never getting billed to a client. The last thing we want is office supplies going into our client cost advanced balance sheet instead of being expense. Now, and keep in mind, if there is a default distribution account, the GL distributions icon there, that you open that up, that will override whatever the default is. Even though once you override it and close the folder, it still shows the default distribution account, it will get overridden with whatever you put in there. And then, of course, if it's for a client advance, we need to open the expense distributions to do the expense. When you go to print the check, and just as a reminder, I'm going to go back to from this screen. Once you've done the voucher, to get to where you're going to print it on a quick check, you hit the Save button, and the Save button brings you to this screen right here. There'll be a check number in there, and once you check that box for a manual check, the starting check number will disappear. It requires you to put something in there, and it has to be a number. It can't have letters in it. You also want to make sure that check date gets changed to the date of the charge also, or that's going to make it difficult to reconcile, because this is the date that's going to show up on your bank statement, on your bank reconciliation tool that you're going to try to match up to the credit card statement. And if you forget to change the date, because this date is going to default to whatever today is. So if I think I created this screenshot yesterday. If I hadn't changed it, it would have said July 7th there. And I don't want it to be July 7th. I want it to be the date of the charge. Once you, and the check number, as I mentioned, is irrelevant. I would just number them consecutively. So the 1, 2, 3, 4, 5, they would just go on like that. Once you hit OK, keep in mind that quick checks post automatically. So it's automatically going to post to the general ledger. It's going to post to the client ledger so you can get it on the bill. And at that point, you're going to be done. The next thing I want to talk about, though, is how we're going to handle credits or refunds from the credit card company. That's not uncommon. You have a flight was canceled, or in the example that I'm going to walk you through with screenshots was a case where we had a $25 baggage fee on an American Airlines flight was refunded. That actually rarely happens. I got them to do it once, but I literally wrote an email. I found the email address to the CEO of American Airlines on the internet and emailed him, and the next thing I know, I got an email saying they were going to credit me for the baggage fee. But anyway, we need a process for handling that too. These are going to be negative, or they're going to be credits on your credit card statement, which would be kind of like a negative check. And Juris won't let us write a negative check. So this is going to be our process for handling credits. And hopefully there's not a lot of them, maybe 2 or 3 a month, hopefully. But anyway, this process is a little bit different for handling the credits. There are 2 steps, or sometimes just one, to handling the credits or refunds on the credit card. And the reason I say sometimes just one, if it's for a firm expense, we're just going to do step 1. But if it's a client cost advance, we're going to do both steps. So in this case, you're actually going to do a journal entry. You're going to do a journal entry to debit the credit card payable GL account, and you're going to credit the original GL account for the original credit card charge. So if it was an airfare for firm-related travel that went to our travel expense account, and whatever that GL account is what's going to be the credit. If it's a client cost that was billed to a client, then it's going to hit our client cost advance GL account as the credit. So the first thing we'll do is the journal entry. By choosing the GL account for the credit card payable, which we've assigned to the bank, ensures that it's going to show up on our bank reconciliation. If it's also, make sure that the comment field on the journal entry starts with the timekeeper or the user's initials, or whoever the credit card holder is, or the person using the credit card, whatever their initials are. If the credit's for a client cost advance, you also are going to need to do a negative expense entry to the client matter for the expense code that it was originally charged to. So the client gets credit for it. We may have already billed them. The person editing the pre-bills will realize that probably when they see the negative expense on there. If the positive one is also on there, they may want to just suppress those on the bill so the client doesn't see them. If the client was already billed for it, then we're going to need to have the negative expense entry on the bill so that they get credit for the fact that we didn't actually pay for this expense, or we got a refund for it. So here's what the journal entry would look like in this example. I probably didn't know about the credit until I got the bank statement, probably, or the credit card statement, I mean. In this case, the attorney has the initials BHA. So you'll notice up in the comment line, I started with BHA, and then I wrote American Airlines refund of baggage fee. Down in the down in the journal entry itself, you can see I debited the credit card payable, which is my bank account, GL, and then in this database, 1100 happens to be my client cost advance account. I'm not sure who changed. Someone changed the title to fees receivable. That's really my client cost advance account, and I didn't change it before I did the journal entry. In the reference, I actually put the client matter number 2. This happens to be client 4000 matter 3. I just put that in there. Whatever's in that reference field is what your firm administrator or your accountant is going to see when they run the general ledger trial balance detail. So they'll see it was a refund of a baggage fee that was charged to 4000-3, which if they want to, they could then go to client matter inquiry and look it up and see whether or not we gave them the credit or not. You save it and post that, and then you go do a negative expense entry. So in the statement, in an example I'm giving, I'm pretending like my credit card statement was dated like July 7th. So the credit came on July 1st. So you'll notice that my journal entry was July 1st because I looked at the statement and that's the date of the credit. And then the expense entry I'm also doing July 1st. If you want to, I suppose you could backdate the expense entry to agree with the original charge so that when you're editing the pre-bill, they're right next to each other. I don't necessarily see any harm in that other than if it was for a few months ago and you've already read a bunch of reports, I would just go with the date that's on the credit card statement date because that's how you're going to be doing your reconciliation. So I would generally recommend using the date that appears on the credit card statement. But if you wanted to do that to help the billers, you could. So I put in the client the matter. The expense code was out of town travel. I had to look it up. It was a negative $25. And in the narrative, I put refund of baggage fee from American Airlines. You may or may not have a receipt for this. If it's something that where you need to attach the receipt to a bill for a client, you may have to make a photocopy of that page of the credit card statement and scan that and attach it to it. Then comes our process for paying the credit card bill. Okay, so we've been entering these transactions in during the month. The credit card bill comes, and we have a process of going through, and we'll see here in a minute of matching those up and seeing which ones we still have to enter. But that doesn't necessarily stop us from paying the credit card bill immediately if we wanted to, but certainly by the due date. The process for paying the credit card bill is we're going to cut a check out of the operating account using the credit card vendor. So if my vendor is American Express, that's who the vendor is going to be, who I'm paying it to, the credit card company. Well, I'm going to use the operating account as my bank because I'm writing a check. This is an actual check. And this can be done any time after the bill arrives. I mean, maybe I haven't had a chance to go through and reconcile every attorney's credit card yet. Or maybe I had to go to some of the attorneys asking questions as to what the client matter is or what the charge was for. That becomes completely irrelevant to paying the credit card bill. I can pay the credit card bill anytime. The credit card payable GL account is the GL distribution on the check. And on the American, in my case, American Express, but on the credit card vendor, you may want to set up the credit card payable GL account as the GL default distribution account on the credit card vendor. It could be American Express, Visa, MasterCard, however you name the vendor that you cut the check to. So here you'll see it, and in this case I'm doing it with a quick check. You could always create a payment voucher and get it out there for payment by its due date, but you'll see that the vendor is American Express, the bank account, that happens to be the name of my operating account. And you'll see I put in the invoice number, I just put like the statement date in there. You can put whatever you feel is helpful to you in there. The invoice date, and I just made up a number that the credit card bill was like for $13,000. $267.22. I just kind of made that up. So I'm paying whatever the credit is. I'm going to open it up to the payment voucher, so I'll double-click to open up the payment voucher, and in the reference field, I'll type in what it is. I'll put the GL distribution if the default isn't filled in with the 2100 account, which was in my example. I'd have to open up the GL distributions and put 2100. Not going to do the expense distributions. Those are all done through the previous process. All I'm doing is cutting a check to pay off this payable on my balance sheet, which, by the way, as we were entering these transactions throughout the month, our liability on the balance sheet kept growing and growing and growing. Then, of course, when we make this payment, it'll be reduced by the amount of the payment. So if your credit card statement's in the middle of the month, you'll be able to have an idea of what your credit card payable is as of the end of the prior month. When you run your balance sheet, there'll be something in there because you will have been entering in transactions. So you may have something you missed, and you'll only find out about when the statement comes in, but there'll be a balance in there. Here's the GL distribution, so I double-clicked and I opened that up and I put that in there. 2100 is my American Express credit card payable. I'm paying the full amount. There's going to be a check number because this is for my operating account, and I wrote this check yesterday, July 7th, and it was check number 1420, so I made sure when I'm putting the check in the printer that it says 1420 on the check. If not, I'll correct it here. So I'm not going to do a manual check. I would do a manual check if I paid this online. So if I went online and just did a transfer from my checking account to it, and I'm not going to print a check, then you could do a manual check in that case. So then the last thing I want to go over is reconciling the credit card statement. So during this reconciliation process, we're going to be entering, it's just like doing a bank reconciliation. We're going to be entering in transactions that we found on the credit card statement that nobody gave us receipts for. The credit card charges are going to show up on the left-hand side of the Juris Bank Reconciliation tool, and the credits and payments are going to show up on the right-hand or the deposit side of the Juris Bank Reconciliation tool. Now, this next screenshot of the Bank Reconciliation tool, I had to shrink it down a little bit to fit, so it might be hard to see or to read, but you can see, and actually I put it red on here with my tool. You're not going to see the word credit card charges, but on the left-hand side, you're going to see the credit card charges, and on the right-hand side, you're going to see the credits. You can see my $25 baggage fee there, and also, interestingly, you see an AP check on the right because we cut a check to pay off the credit card, but it shows up as a deposit on here. You'll notice that in the payee and the memo field, they all start with the timekeeper's initials. And we'll come back to this screenshot in a second. So you're going to want to enter the credit card statement balance as a negative number in the current bank in the statement balance field. So down here, where the current statement balance is, that's going to be a negative number because we don't have any money in this account, but yet we are incurring charges against it, so it's a negative number. You're going to want to sort the left-hand side of the reconciliation by the payee or the memo fields to group transactions by timekeeper or user. So if you didn't already know this, and this works throughout everywhere in Juris, any column heading that you click on will sort by that column. And it'll sort high to low a lot of times first and then low to high, so you might have to click it twice. But the reason I want to sort by the, and you can see the pay and the memo fields are going to be almost identical. I want to group all of it together because your credit card statement most likely is going to come grouped by each person. All their transactions might be all in one section or one page, or they might have their own separate credit card statement that all adds up to a total. So you want to get them all in the same place, and then we're going to mark them off as cleared as we check them off on the credit card statement. Once we've done all the ones for like AAA, then I'm going to look at my credit card statement for timekeeper AAA, and I'm going to look and see, okay, I've got 3 of them missing. I'm going to go back to that person and say, what are these? I need these. Once you get them all in, you'll pull out your calculator and you'll add up the AAAs that are in the bank rec tool and make sure that they agree with the credit card statement subtotal for that timekeeper. If they do, you know that you've got them all reconciled. And if you want to, you can even go up to your view so that you can hide the ones that have been cleared, so that it makes this get smaller and smaller the more you reconcile. You'll be able to, and you can also do different people's on different days. You know, today I might do AAAs, but then that's all I got done was Albert Allen's, and I had something else I needed to work on, and I'll get to BHA, I'll get to them tomorrow or next week or whenever. So you don't have to do them all at once. You notice on the right the deposits that came from the payment and the credits. So you'll have to match those up as well. The one thing that actually, one correction I need to make, in the memo field of that journal entry, you're going to need to put the initials at the front of there if you want to sort by that. My slide said to put it in the comment field. I would put it both places so that you can sort any credits by the timekeeper as well, or the credit card user. You'll mark each timekeeper's entry as cleared as you mark them off the credit card statement. I already mentioned this for entries that are on the credit card statements that are not in Juris. Go back to the timekeeper for information needed to enter it into Juris using the process we outlined before. So you'll go back and do the manual quick checks for those. Once all the transactions have been cross-referenced to the credit card statement and marked as cleared, your unreconciled difference should be 0. And if it's 0, then you know you've balanced it, and that you know you've got everything into Juris, and you can reconcile. With your green reconcile button will come alive, and you can reconcile it the same way you do your other bank statements. And you can feel confident that you got everything in there and your financial statements are accurate. There's just a couple other key points I want to mention before we wrap up. Vendors paid by credit card do not get 1099 for credit card payments. And that's probably a question somebody was going to ask at some point in time is, how do I give them a 1099 for those charges when I'm using the temp vendor? You're not supposed to give your vendors a 1099 for credit card payments. 1099s are only issued for vendors that receive $600 or more in 1 year in cash or checks. Those credit card payments, it is the responsibility of the credit card issuer to provide them, if it's over $600, with what's called a 1099K. And so that Visa or MasterCard or whoever issued the credit card, if it was over $600 in charges were paid to them by any number of people, they're going to get a 1099K for that. It is not your responsibility to report that, and in fact, you do not want to include that in your 1099 miscellaneouses that you do if you paid it with a credit card. Keep in mind, this process can be modified slightly to fit your firm needs and your workflows. It can be modified to where maybe payment vouchers are done in a batch rather than one at a time via quick checks. Either way, the number of steps is pretty much the same. You still have to do a payment voucher. You're still going to do a check. And if it's a client advance, you're still going to do an expense entry. The downside of doing a check batch is that it will actually print each transaction on a piece of paper. So if you got a lot of transactions, you're going to be killing a lot of trees. And if you happen to have any finance charges because you didn't pay the bill on time or cash flow was tight, so you didn't pay the full bill, finance charges, you can enter those as a journal entry. And of course, you're not going to have any timekeeper initials in front of those. So you just have to do that and mark it as cleared. Well, that wraps up I wanted to go through as far as going through this process for you. At this point in time, Katie, I'm assuming you've been collecting questions, or people might have questions. If you use your question panel, Katie will read me the questions, and I'll answer them as best I can here in the remaining 12 minutes that we have.
All right. Yeah, we do. We have a ton of questions piling up, and I will say we will be sure to get to each and every one of your questions. We just may not be able to get to all of them on the webinar today. Just wanted to go ahead and let you guys know that, given that we have so many questions right now. So, Stan, our first question.
I told Katie beforehand, I told you there'd be a lot of questions, didn't I?
You did. You absolutely did. Very true.
Okay.
Our first question actually comes from Barbara. Her question is, why did you use the liability account as the asset account number when setting up the bank account Amex Bank?
Okay. So when you're setting up a bank code, it's an operating bank. The only field available is an asset, and only the asset account is what hits the bank reconciliation tool when you do transactions in Juris. So I know it seems kind of counterintuitive to use a liability account there, but in reality, it is like a bank account, but it's just, imagine if you started with zero in the bank, but you have an overdraft and you started getting a negative bank account balance. That's really what it is. The reason I use a liability account is because it's always going to either be zero or a negative number as you put transactions in there, and it truly is a liability that you still owe and have to pay. So that's why we set it up as a liability account, but we have to put it in the asset field in order for it to work correctly with the bank reconciliation tool. Okay?
All right, great. Our next question is also from Barbara. She asks, Juris Help says to open both a new bank asset account and open a payable account for our Amex accounts payable. Is that the case?
Okay. I would have to see that. Maybe a change needs to be made to that. I mean, basically, I created the liability account as the GL account, and then I'm using that as the bank code. It doesn't need a bank code. So if you can point me to where you found that, and I'll look at it and see if it needs a correction or if I need a correction. But I think that it sounds to me like the manual might need a correction or the help.
Yeah, good to know. All right, our next question comes from Tammy. Tammy asks, does the bank show up as an asset on the balance sheet along with the payable as a liability?
No, you're not going to. Just because you set up as a bank account doesn't automatically put it on the balance sheet. It's the GL account is what shows up on the balance sheet, and we're just going to have the one. And this might stem from similar to what Barbara's question was, where maybe our help is saying to set up two of them. Because you're going to tell it where it goes. So if you're using financial statement layouts in Juris, you're going to put it in the liability section of your balance sheet. If you're using Juris Suite for your balance sheet, you're going to go into go to the admin and go to chart of accounts, and you're going to assign that to the account category for current liabilities. And that's going to make it appear only in the liability section of the balance sheet. Even though you've created it as a bank account in Juris, that doesn't mean it's going to show up, on the financial statement as an asset or bank account. You define where that goes. Okay?
All right, great. All right, I have one more left. We're getting through these faster than I expected. Our next question comes from Carol. Carol says, our Amex statement has a section that includes not only refunds, but cashback credits from certain restaurants. It is rarely possible to determine the original charge the credits apply to. They're usually less than $10. How would you handle those transactions?
Is it, read the beginning again, is it in a separate section? It's not under, is it separated by timekeeper? I can't remember what she said there.
Yeah, she says our Amex statement has a section that includes not only refunds, but cash back credits from certain restaurants. And then it's rarely possible to determine the original charge.
Okay. In those situations, I would do a journal entry, just like you would do with the refund. I would use the attorney's initials if the statement groups them by the attorney. If they don't, if it's just one section for the entire credit card bill at the end, I would just do one journal entry, and I would book that to other income. So you'd have a journal entry that would be a debit to, like in my case, $2,100 was my credit card liability account. I would debit that, and I would just credit other income.
All right, great. I'll give it one more minute to see if anybody else has any questions. All right, that seems like we are finished for the day. But if anybody has any other questions, I'm sure you can reach out to the Juris Professional Services team. In the meantime, we do have a question for all of you. If you want, you're going to see a poll launch on your screen. Do you want more information on how to implement this for your firm? You can just select yes or no. And we're just going to give everybody a second to choose one. This will kind of help us decide where we're moving forward with this in the future and what more we can offer you in this area. All right, just giving it one more minute. People are still voting. All right. And that's about it. All right. Well, thank you guys so much. It sounds like this was a really good topic for all of you. That officially concludes today's webinar, and I would like to thank you, Stan, once again for your expert advice on today's topic, and thank you to all of our attendees for taking time out of your busy day to join